Geodrill is a leading drilling services company for the mining industry, operating in West Africa, Egypt, and South America. The company just released its Q2 results showing strong growth, with revenues growing 22% to 50 million US and EBITDA growing 31% to 13.9 million US. CEO Dave Harper is here to discuss the results. I'm Martin Gago with Market Radius Research. Please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Dave, good to see you. Congrats on a strong quarter. How are things going?
Things are going good. Thank you.
Excellent. You've got a few slides here you're going to review the quarter initially, and then we can dig into some of the matters. Take it away.
Okay. So we've just released our quarter 2 2025 results. Basically achieved our highest ever quarterly revenue, $50.4 million. That's a 22% year-over-year increase compared to quarter 2 last year. We also delivered record EBITDA, 13.9 or 28% of revenue. This is an increase of 31% compared to this time last year. In doing both of these results, not only did we set record EBITDA and record revenue, we are improving on the records that were set in the preceding quarters, quarter 1 of 2025, for both EBITDA and revenue. So we think that that's a great result. We generated net income of $5.3 million, or 11 cents a share, similar to what we did in the previous quarter. Yeah, so our H1 is looking great. We're just shy of $100 million in revenue at H1, doing really well. One outlier in this particular quarter was our gross margins, which were $12 million, 24% of revenue. This was actually down from 31% a year ago. And there's some reasons for it. The two main ones being that, we have a large component of our workforce is Ghanaian, and the Ghana cedi, which is the local currency here, and that's the currency that they're paid in, improved by 40% in the month of April, and we've had to carry that through May and through June. Very unusual for this to happen. Comes completely out of left field, obviously very much beyond our control. The other thing is we're going through a very big, significant ramp up in South America at the moment. And South America has very onerous regulation in terms of health and safety and so on and so forth. And so, the signing of a contract and the arriving of a rig and the revenues just simply do not correspond on the same day. We go through weeks, sometimes even months of going through, introductions and, mobilizations and so on and so forth. So, that's really the two main reasons. The latter of those two explanations that I've just given will find its own water level, and the revenues will catch up with the costs, and water will find its own level. As far as the cedi is concerned, that will take some months to play out, and I would expect at this point in time it will also cause some margin compression for us in quarter 3. So
you're talking about the Ghanaian currency here, right?
Yeah. That's correct. Yeah, and that can simply be what I'm saying can be checked by simply just Googling the Ghana cedi. It was the strongest performing currency in the world, bar none, in April. It improved by 40%.
And Dave, sorry,
yeah.
just like Ghana, is actually disproportionate amount of your expenses are based out of there relative to revenues, because you've got one of your large maintenance facilities there, and a lot of your workers in different countries are coming out of Ghana, right? So it's not like the expense relative to the rest of the company are relatively high in
right.
That currency terms, right?
Absolutely, yeah. I mean, across the group, we employ just north of 2,000 people. Approximately 50% of them are Ghanaians, so they're paid
Oh,
in Ghana.
wow.
Yeah, so it's look, just to give just very high
And
level.
50% of your revenues aren't from Ghana, are they?
No, 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 about 30%. So
Okay.
how it works is a lot of our Ghanaians will work in other countries like Ivory Coast, Senegal, and Egypt. So I mean, we're very proud of the fact that we've developed an African workforce, and that in part has plays enormously into our margins. It's a very it's an aberration. Okay, this is a completely out of the left field type situation that will sort itself out. Not something that I'm concerned about, but the just the effect on it for the quarter in terms of COGS, the cost of our COGS in the month in the quarter two was 76%, and that's versus 69% in quarter two 2024. So that gives you an idea of the effect of how that affected our margins. But look, the point I'll make is this: we still made a 24% margin.
Yeah.
It is, I mean, most companies would be pretty happy with that result. That we have been able to sustain this and still be profitable is, I think is testament to the fact that we've got a robust business model, and as I say, water will find its own level. Came completely out of the left field, and the rigs in South America the revenues will catch up with costs. As for the Ghana CD, it might take a quarter, could take two quarters for this to play out. And so for the back half of this year, we are looking at margins that were not what we thought they were going to be, but will still be profitable. It's going to be a great year. If we look at where we are at the H1,
Yeah.
you know, done very well. And in the back half of the year, we'll still do well. We just probably won't do as well as we did in the first half of the year.
Yeah. Because
It'll still be a great year.
Q3 is because of West Africa still so much of the business and the rainy season. That's always one of your softer quarters, and then it picks up again in Q4. Although I guess Q4 with Christmas gets a little soft as well. So it's like you were saying, the first half of the year is generally stronger than the back half, right?
Always. If you recall over the years, our H1 is always stronger than our H2.
Yeah.
And so our best work comes in H1, and in H2 is more of a developmental type of half, where we slow down for the wet season in West Africa. And at that point, we bring the rigs in, into the workshop, and we catch up with maintenance and so on and so forth, and all in readiness for the next H1. And so our
Yeah.
best work is always in H1. And at this point in time, our H1 is so strong that it's gonna carry us for the rest of the year and set us up nicely for H1 next year. By which time we will have had a chance to possibly claw back some of those salary costs if the CD doesn't turn around and go the other way, which some are saying it might.
Yeah.
And we don't know about that. What we have some confidence in is the fact that South America will start to kick in and revenues will catch up with costs. So yeah.
All right.
So other highlights from the quarter. We ended the quarter with net cash $4.4 million. Balance sheet continues to improve. We closed out the quarter with $130 million USD in total shareholder equity. That's again, that's a record. And what else happened in the quarter? We had some gains that came in from some of our equity investments, which we were happy about. Yeah. So
All right.
operationally, the rollout of the rig count continues to grow. We're now knocking on the door of 100 rigs, 98 rigs plus one rented. So we're almost at 100 rigs. West Africa continues to go well. Egypt continues to go well, and South America in particular continues to go well. We're adding 5 rigs over there at the moment. That takes the total rig fleet that we have in South America to 17. So that we've, probably the majority of our growth is going into South America at the moment, and that's going to give us a better balance in terms of jurisdictional risk and commodity risk. We don't drill for gold at all in South America. We only drill for copper. And so currently gold still speaks for 85% of our business. We'd like to try and get a bit more copper into the commodity mix and a little bit more of South America. Yeah, in the macro outlook for what we're doing, gold continues to be strong, all-time highs. Copper continues to do very well. So I think with robust demand for the commodities that we're drilling for, and no shortage of activity, our utilization is still very strong through the Q2, 70+%. That always falls in Q3 and 4. So we're currently at about 55% utilization. Again, that's a lot better than industry standard at this point in time, and it's pretty normal for us during the back half of the year.
All right. I find it interesting. So because outside of South America, essentially all of your drilling is gold related, correct?
All we drill for in Egypt is gold, and all we drill for in West Africa is gold at this point. In South America, we drill at this point only for copper. So those are the two main things. Now, from time to time, when things are running like lithium, we might have some lithium work going on in Ghana, but there's not much lithium work going on at the moment. So we're really just a gold play in West Africa. Yeah.
All right. So your South American operations are then essentially at 15% of revenues. Do you have a goal of where you want to try to get that to balance out your portfolio of both the geography as well as the commodity?
Yeah, I'd like to get it to 60/40.
Okay.
And that might take us some time if you think about it, a couple of years ago, South America was only 2% of our revenues, and now it's in the order of 15%. And that's increased as rigs come on. So it'll become a bigger piece of what we're doing.
Do you get roughly the same kind of margins in South America as you do in Africa? Are the economics relatively similar between those two markets?
No, we don't. South America, no, we don't. West Africa, the attractive thing for us with West Africa is the premiums. We wouldn't be in West Africa if we were drilling for the same margins we were in South America. But we get a better risk profile in South America. So all in all, what we're looking for is a reasonable margin and a reasonable risk profile. Well, we've been in existence now for 27 years, and we think that we know the best and the safest places to operate in West Africa. The thing with West Africa is that it comes with risk. And by being here and living here, we see the risks, and long before they reach the public domain, we will be aware that something might not be working great in one of the particular jurisdictions. And demonstrably, we've shown this. We took a decision to move away from certain jurisdictions, and then you started to read that other companies were doing the same. What we also demonstrated is that it's not that difficult an exercise to pack up all of your drills and leave a jurisdiction and get them repositioned into another jurisdiction. It may take a quarter, could take 2 or 3 quarters, but it's not like we're bolted to the ground. We're not talking about a pub or a hotel or a building. Rigs are very mobile pieces of kit. You put them on a truck and you pack them up and you leave.
Yeah.
All right. That's what we did. We did that in Burkina Faso. We left. And we did the same thing in Mali, just because they were great regions for us once, and then suddenly they were not our cup of tea. So
Yeah.
without too much, ado, we basically packed the rigs up and we left, and we moved them to better opportunities elsewhere. And so that hit our top line, and hit our bottom line for 2 or 3 quarters. And now, as you can see by these numbers, I mean, if you look at revenue as a leading indicator, $50 million quarter, that's getting up there.
Yeah.
And what it says to me is that this company is going to be quite capable of generating $200 million in revenue eventually. And when I say
Yeah.
eventually, I'm not talking about next week. I'm talking, probably in 2 or 3 years' time. But I recall we were having the same conversation 2 or 3 years ago when we were just breaking through the $100 million ceiling on
Yep.
an annual basis, I'm talking about. And now we're trending. Well, I'll quote our analysts as saying that we will end up this year at 170 zip code revenue. And I'm very comfortable with that prediction at this point in time.
All
There
right.
won't be, it's not that there won't be a few potholes along the way, but we
Yeah.
just onwards and upwards, and we just keep growing the story,
Yeah.
even with potholes, as you've demonstrated with these gross margins in this particular quarter. Even with the potholes, we're still gonna be profitable, and we're still gonna keep growing. That total shareholder equity just keeps improving year over year over year, and that's it. That's the Geodrill story, I guess.
All right. Well, I think we've largely covered everything here. Any final thoughts or words before we wrap up the quarterly review?
Oh, that's it for me.
All right, Dave. Thank you very much. Appreciate the time. Talk to you soon.
Thanks, Martin. Cheers. Bye.